Are you even ready? Imagine this. It's 2030, and Bitcoin isn't just a store of value. It's worth $2.4 million per coin, outpacing all U.S. real estate in value. Sounds crazy? According to Ark Invest and BlackRock, it's not only plausible, it's happening faster than most people realize. Let's unpack the numbers and what they mean for you. The new corporate game. Buy Bitcoin, use it to buy more Bitcoin. A new breed of companies isn't just buying Bitcoin. They're built on Bitcoin. Take 21 Capital, for example, a company preparing to go public with a mission to create products on top of Bitcoin, and then use all the revenue to buy more Bitcoin. Their entire business model is designed to maximize Bitcoin per share, not dollar value. This mirrors what MicroStrategy has been doing, except 21 Capital wants to do it faster and bigger, aiming to start with 42,000 BTC and eventually accumulate over 1 million BTC. Bitcoin is disappearing from exchanges fast. On-chain data shows Bitcoin isn't just being bought, it's being pulled off exchanges at an accelerating pace. Every few months, hundreds of thousands of BTC disappear into long-term cold storage. If this continues, liquid Bitcoin could run out by 2026. And it's not just retail doing this. The whales are here. MicroStrategy went from 200,000 BTC to over 500,000 BTC. In less than 5 months, ETFs are absorbing hundreds of thousands more. New entrants like 21 Capital are gunning for another million. Retail investors even putting in just $500 or $1,000 monthly are draining the supply. Once the Bitcoin is gone, it's gone. The price isn't going up just because of hype. It's going up because there's less Bitcoin left to buy. Governments, sovereign wealth funds, and states are now in. This isn't just a corporate movement. The U.S. government reportedly wants to accumulate up to 1 million BTC. Sovereign wealth funds are reallocating away from gold and into Bitcoin. Latin American, African, and Asian countries are actively stacking BTC. Even individual U.S. states are exploring treasury strategies involving Bitcoin. All of this adds fuel to the long-term supply shock. According to Ark Invest, what started as a $500,000 per BTC forecast for 2030 has now been revised upward to $2.4 million. Based on current trends, adoption rates, and dwindling supply. Why the U.S. may never catch up. Despite the U.S. government's ambitions, it's likely too late. Corporations like MicroStrategy are acquiring BTC at a faster pace than governments. ETFs and private funds are ahead. Sovereign entities are buying quietly. The U.S. might hope to get 800,000 BTC over a decade, but private entities are set to surpass that this year. Add in BlackRock, Fidelity, and whispers of tech giants like Google and Apple stacking Bitcoin under the radar. And the race is already lost. Why this isn't hype? It's a global repricing event. When Larry Fink says Bitcoin will be worth more than U.S. real estate, it's not a meme. It's a reflection of a systemic transition. The dollar is weakening. Interest rate cuts, inflation, and mounting debt are eroding global trust. Tariffs are isolating the U.S., pushing countries to trade in Bitcoin. Gold is losing its throne as wealth managers and central banks rotate into BTC. And there's a coordinated global effort from corporations and governments to secure as much Bitcoin as possible. Now, not later. Final thoughts. What should you do? This isn't financial advice, but if you're watching this unfold and still wondering if it's too late, ask yourself, what happens when Bitcoin really does hit $1? Or 2.4 NM? At that point, it won't be about catching the next bull run. It'll be about whether you positioned yourself while there was still time. When Bitcoin hits $1 million, don't think you missed out. Feel like you did what needed to be done.